Okay, good morning. It's Friday, October 28th, and it's about 9:50 a.m. Pacific Standard Time. So, as you can see, the market is continuing to go up, but I want to point something out that's really important. I want to discard this balance area just for now. Of course, this is very important. But I just want you to see that what the market's actually doing here, because I had mentioned before that if this thing came back down here, that I had to decide whether I'm going to get out or not. But just want to clarify that. There's so much to trading, and that's why sometimes it takes years to understand. But this is following a pattern, which means that it goes up, and it comes down, it goes up. So you got buyers coming in, you got sellers, and you got more buyers coming in, sellers. And this is actually a healthy uptrend. So when you have this balance area, it is very important, of course, but it can dip down into this balance area, and that's okay as long as it doesn't go too far down, because then it's going to kind of break this trend. Let's give you an example. Actually, up here, look at the Dow. So this to me is a little scary, and I'll tell you why. It's going straight up. So obviously, you don't see that anywhere else. Obviously, when it goes straight up like that, it's going to come crashing down. Or at least, balance out before it crashes down. But, it just can't keep this up. This isn't really actually healthy. It should be going up and then down, up and down. But from here, it's just going straight up. So that's a little bit concerning, only because the Dow, NASDAQ, and S&P kind of follow each other. So I'm not sure what's happening here, and hopefully it doesn't drag down the S&P or the ES when that happens. So I'm watching that. But it looks good. I'm still hopeful that this thing is going to go up above here, but watching that Dow, I'm guessing, I might just get out today and collect my profits from here to here, which is pretty good. And then I can always get back in, get back in on Monday. And that's not a problem. And what's good about this is you can get out anytime you want. And anytime you have a profit, that's really good. Because it takes sometimes years to even break even in this market. And that's because you got to learn how this thing moves. And so that's what I'm here to help you, to teach you. I think having a mentor in anything in life will help you out tremendously. So I had a good mentor, and he taught me well, but it still took me a while to learn. And so maybe I can kind of cut down that learning curve with you guys, and I'll go into a lot of detail. My mentor didn't do that with me. We didn't really have this technology back then. It was back in 1998, 99. So that's what it's doing. This is actually a healthy, like I said, it's a healthy market going up as opposed to that Dow. And we'll see what happens today. Might be getting out around here. It is Friday. It's about 10 o'clock, close to 10 in the morning. So we still have several hours of trading. And so I'm just going to wait. I'm pretty sure it's going to hit my alert here and go up. And who knows, this might be a limit up day where it just takes off like the Dow. And if it does that, that'd be really sweet, because I'll be getting out for sure, because God, maybe 90% sure it's going to turn around next week. So we'll see what happens. I can't really say anything now. I just got to wait to the end of the day and see where this market goes. But you can see right now, as we're talking, it's going up. In fact, probably in a few minutes it's going to break this. And that's going to be really sweet for me and for those who got in down there. So again, lesson of the day is we're going to discard this balance area just for a second and look at this climb, very healthy climb. Because this is, again, a buyer's and seller's market. That's it. You don't have to look at anything else. You don't have to look at indicators, PE ratios, whether the company is making a profit or not. That doesn't matter at all. Because there's companies, you saw that in 2008 and also in 2000, that were losing millions of dollars, but their stock was going up. This is different than that. This doesn't care about whether the company's making money or not. It cares about where people are putting their money in. You know, it's a supply and demand. You know, if you got people trading this up, everybody else is going to jump on board, and that's what happened with Bitcoin. People just kept trading and trading and trading until it finally just ran out, and then it came down, and people didn't understand that. And it's happening again. You know, Amazon's coming out with their own crypto, and I see people and they're just jumping on it. They think that's the next Bitcoin. Well, I can tell you what's going to happen. It'll come out, the market will probably go up, and then they're going to turn it around. It's going to go straight down. All those people are going to lose their money again because they're not following these patterns. They're not looking at stuff like this. This is super important. And if you stick with me and you learn how these markets work, you can do this for the rest of your life if you want to. And like I said, the way I trade is there's not a whole lot for me to do. I can just leave and come back and maybe sell out today. You know, I can sell out right now. It's fine. So this is pretty simple. Took me years to get here, but hopefully we can shorten that learning curve with you guys. Okay, that's it. Talk to you later.